Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Nitin Spinners, a very interesting company that I have been following for the last 6-7 years and one of the first companies that I invested or traded in. So let's understand about the company and whether you can invest or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Nitin Spinners, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up every now and then. For detailed market or company talk or one-on-one discussion you want to have with me, you can directly email me and we can work things out. Now about the company. Established in 1992, Nitin Spinners provide textile products like cotton, and they have many cotton weaving spindles running. They export to a number of countries globally in the Europe, US, etc. The market cap of the company is still under 500 crores, and this is more of a global textile play. But you need to understand that most of the textile business have gone to Bangladesh over the years rather than staying with India. India was a behemoth in this space about a decade back. If you look at the numbers, so financials of September FY21 versus FY20, sales were up by 14.5%. The PAT grew tremendously and they had a PAT of 11 crores, which was interesting this time around. Raw material cost also helped. Lower cost of the cotton, you can say, balls also helped in that regard. Decent promoter and institutional holding, there is 25% free float. Dividend yield is pretty good. It gives a dividend of 1 rupee 20 paisa, around 2% dividend yield, but you can see that the return ratios are not that great, and one needs to understand that the PE for the sector doesn't remain that high, so it trades at around 5-6 times PE at best. So the performance of the stock, and this is where things really get murky, because I have been following the stock since it was around 25-27 rupees, invested in the stock at around 29 odd rupees and exited around 65-66. Then also traded in it in 2017, if I am not wrong, when there was another, you can say, mid and small cap raging bull market, and there I bought around 60 and sold at 130, 135. So yes, you can trade into the stock, it could do well, but you cannot hold long term, and I'll tell you why. So stock has done nothing over the last 5.5 years. So in 2015, when I remember, in 2013 and early 2014, I bought the stock at around 28-29 rupees. So the stock went as high as 105. I exited at 60-65. So the stock went from 30 to 105, and from there on in, it's currently at 60 rupees. It was at around 40-45 just a couple of months back. So basically it's down 40-45% from the 2015 high. Over the years, over the last 5 years, many companies have become multi-baggers. Some in textile also have become big, others in packaging, and in, you can say, you name it, electronics, manufacturing, retail, and many other sectors have become 8, 10, 15 baggers, chemicals per se. But this stock has just been range bound from say 140 on the upside to around 50-45 on the downside. So it keeps on having bounces, as I mentioned, like we have seen this time around, and it normally happens when the small cap index or small cap stocks are running very fast, and that is what has been happening. So over the last 2-3 months, you would have understood from September, October onwards, September mid, that all sorts of mid and small caps are running, and that's where the you can say surge in Nitin Spinners has happened. So I don't think this is anything special or anything that you can say that the stock is very cheap and it could go to 600, 500 like that. This is how it happens in this stock over the years. This is how it has happened over the last 6 years I have seen. And so probably be careful investing. Yes, you can trade. So you need to understand that for industry, I'm sorry. For this industry, for the textile industry, normally the PE ranges from 3 4 on the downside to 7 8 max. So even if it comes out with decent numbers, the PE will not expand. It has not expanded so far in the last 7 8 years. So I would say the highest it can go to is 9500 again. So if you buy at current levels, so that's good. Technically speaking, I would say that you buy, keep a stop loss at 50 and look for 95 to 100 on the stock, but do not wish to buy for 3 to 5 years and make big money in the stock thinking that it's only 400 crore market cap, etc. So higher levels would be opportunity to exit. I would understand that there would be people, and I would like their comments, who would be invested in the stock at higher levels, who would be invested in the stock at lower levels, and would have been waiting for the stock to perform. Now that it is performing, what do you feel? And uh, do you think that this is headed way beyond 140, 150? I have my reservations on that. So there are problems in the textile sector, and probably that is why, fundamentally speaking, that most of the stocks are not doing that well. Power supply is still erratic in across India, so it's not that power has come to most parts of India in villages, etc. That power remains 24 hours a day. And textile and this factory kind of a business requires high level of power supply. It has high gestation period. There's capital intensive business. Machinery is obsolete. There's machinery from Europe that are even better. There are machinery available because in Bangladesh the government gives subsidies, big subsidies to textile, you can say produce textile mills, etc. So machineries need to get changed. That has a lot of, you can say, expenses attached to it. Debt is always there in the textile industry, so you cannot stay away from that, because this is not a cash generating business. This is not a business like a Britannia or a Nestle, etc., where it is like you get cash and you sell the product. This is more of a business in which you take loan, and the whole process of setting up a factory, etc., will take time, and then profits from that factory would take time of 2 3 years a minimum. And then you need to understand that global scenario of the textile industry is not that great, so that has also hurt the business altogether. Capacity utilization at its abysmal low levels, as we have understood that people are, yes, buying into electronics, buying into, you can say, decorative products, buying into sofas, you can say dining tables, etc., something which is for home improvement. But very less people are going out and buying into products which are related to, say, clothing a lot, because you need to go into a showroom, you need to go into malls, etc., to buy products and all. And such kind of movements is still restrictive globally. I'm not talking of India, but even globally. So taking all that into account, capacity utilization may just remain low, so you need to take that into consideration. And it is a very capital intensive business. So what are the problems of cotton industry in India? Shortage of raw material. Raw material is always sourced from abroad, most of it, and that is requiring, you can say, spending of money, and that price of raw material keeps on going up and down. So you need to understand that this is not quite a business in which you have streamlined earnings and you can predict earnings. This is more of a commodity kind of a business, and that's why I have not mentioned a lot of, you can say, textile companies in my videos, because I feel that it is extremely hard to understand as to how the performance of the stock would be going forward. Low productivity of labor is also a concern, and labor force is required, that you need to understand, and which is a big factor now with the pandemic going on, that how much of a labor force would be there, 50%, 25%, etc. So as I mentioned, low productivity of labor is also a major concern for the industry. Plus competition from Asian countries. So as I mentioned, Bangladesh and Vietnam is big in this, and Southeast Asia has got into textile industry in a big manner. So India is lagging behind at the moment. Maybe things will change over the years, but then business is more going towards there rather than coming to India. High excise and import duties on products is also a major concern. for the textile manufacturers, and due to that there is higher expenses for the company. And now you would understand that there are many factors that one needs to take into account while investing into a textile company. And that's why I'm saying that being a complicated sector altogether, I tend to avoid it being investing into it, rather than it's good for trading. And if you can read the charts, you can trade into the stock. Then sick mills are also costing dearly for the governments, and sick you can say factories for the company may also cost. So that is why there is low, you can say, utilization at 20-30%, and that will hurt because there is a big cost, you can say, of of the products that are in there. So capital that is required for running the business is a lot, and fixed capital or fixed cost capital of fixed cost is huge in this industry. So that has to be understood while in you can say putting in money in this sector. So what needs to be done? In my opinion, you wait for the turnaround to happen. If there is a complete turnaround, there is a bull run in the industry, then you can definitely look at this stock for a 5-6 bagger kind of a situation. But if you have it and you're making money in it, after a while you would be doing that, because the stock has always languished between 30 and 50. So wait for levels of 80, 70, 80 to exit and make money, and probably invest into direct consumer oriented businesses. Be very cautious in such sectors. And if you have, then probably if you're looking to buy and looking to buy as an investment, then buy as a 10-year play. And whenever there is a run in the next 2-3 years, whenever the run come in again, then you exit. But probably better would be to buy into consistent you can say profit generating businesses, and only put around 5% of your total investment. So this is my video on Nitin Spinners. Please like and subscribe my channel and hit the bell icon so that you can get my videos directly. Thanks a lot for watching.